Welcome to the daily briefing from interest.co.nz. I'm David Chaston. Today we check the current levels of wage inflation, look at the October sales of new vehicles, update the latest broadband international benchmarks, and we'll wrap up with what the other media are reporting. Wage inflation in the September quarter was 3.1%. This represents the increase in labour costs year on year. It is the figure the Reserve Bank considers when it is contemplating the drivers of inflation, and it is unlikely to be comfortable with that level. It means that employers are facing a rising cost that will probably be translated into price rises when the markets will allow. Hourly earnings are rising faster than that, more like 3.9%, but holding costs back somewhat is the fact that overtime is decreasing. In fact, overtime is decreasing quite fast. In the September quarter, the average overtime paid was less than 50 minutes per week. Overall, however, the level of wage inflation does seem to be moderating. Average earnings for a full-time position in New Zealand now seem to be $23.10 per hour, $873 per week, or a bit over $45,000 per year. The volume of new cars sold in October hit an all-time record of 7,904. This was 12% up on the September level and up 2% on the previous record on October 2006. Although Toyota is still the biggest brand sold in New Zealand, the biggest gainer of market share was again Ford, who sold 21% more vehicles in October than September and recovered the position it held a year ago. Holden was down 20% compared with October last year. Commercial vehicle sales really grew fast as well, up by a third over the same month a year ago and up by more than 5% on an annual rate basis. There is no evidence from these vehicle sales numbers that retail sales are moderating. Perhaps part of this is the start of the dairy gains being spent, although there is undoubtedly more to this latest sales figures than that. Another furrow in the Reserve Bank's brow. Today, the OECD released its latest international broadband statistics, and these allow us to benchmark how New Zealand is doing in this crucial area. Unfortunately, we can report that relative improvement is very slow. We've improved one place in these rankings from 21st to 20th. A quantum improvement is possible, and we need look no further than across the ditch for inspiration. Australia improved from 16th at the end of December to 12th at June 2007. It should not be impossible for us to make similar gains. This basic ranking is for broadband subscribers per 100 inhabitants. We have 16.5, Australia has about 23, Denmark at the top of the list has 34. However, when it comes to speed, the OECD measures average advertised offers, and New Zealand ranks 5th at the head of the moderate speed countries. But there is a big gap from us to the 4th place Sweden and an enormous gap to the top place Japan. To improve our download speeds, it is clear we need to invest in fibre optics. Until then, get used to average. You can see the table summarised on the news pages of this website with links to the full OECD report. Embattled lender Geneva Finance has been given a lifeline from its investors at a special meeting in Auckland on Monday. Investors voted to give Geneva a 6-month moratorium after a vote that was claimed to be overwhelmingly in favour. A strong flow of new listings into the Auckland property market during October is being reported by Barfoot and Thompson. They signed up more than 1,900 new listings during October and ended the month with a total of 5,600 available listings on its books, well above this year's average of 4,500. It's a situation where vendors who want to make a timely sale may have to adjust their price expectations to meet the market. An opinion piece in the Dom Post claims a revolution is underway in fixed interest markets as investors opt for security in the wake of the American subprime lending crisis and failures among New Zealand finance companies. You can get more news and stay up with Newsmaker Views on our news page. Join us again tomorrow for the freshest finance news on the web. We'll see you then.